Sui Price Prediction 2026, full technical analysis for 2026 to 2031. Is Sui Network a growth monster, or is it just a super sophisticated investment fund discharge trap? If you are wondering whether to buy, hold, or sell this coin, the next 20 minutes of the video will completely change your investment mindset. We're not talking about rumors, we're talking about facts. What stage is SUI at right now in its development cycle? Are the institutional giants quietly gathering to bet on $3 trillion super trends, or are they preparing to trigger a historic sell-off? In addition to the promising valuation figures for the period 2026 to 2031, SUI is still facing the death throes of tokenomics and the pressure to unlock tokens that no KOL dares to tell you. Don't just look at money matters blindly. Join me in dissecting the full picture of the facts, analyzing the biggest risks, and coming up with the most accurate action strategy for your portfolio right now. Crypto Radar. To understand Sui Network's valuation for the 2026 to 2031 period, we must first answer the core question: where is Sui really in its development cycle? Looking back on history, 2023 and 2024 were Sui's infancy and initial boom, when the network was primarily known as a high-tech Layer 1 using the Move programming language, attracting speculative capital flows thanks to memecoin waves and liquidity-stimulating campaigns. However, moving into 2026, Sui has officially entered a whole new phase: the transition from a speculative blockchain to a practical utility platform and shaping the status of the next-generation blue chip. This is no longer the promise of black and white paper, but is evidenced by a core shift in Miston Labs' product thinking and real-world on-chain data. Sui token has now passed the test in terms of technical infrastructure. With its horizontally scalable architecture, Sui's basic mainnet network configuration has reached a minimum processing level of 300,000 TPS and is capable of upgrading to 600,000 TPS or more just by upgrading validators' hardware without increasing latency, unlike Ethereum or Solana, where block space is a finite resource, leading to network congestion and gas fees skyrocketing when demand is high. Sui's structure turns block space into an infinite resource. This is the launchpad that helps Sui transition from a medium-scale DeFi ecosystem to the goal of becoming the global liquidity layer of the internet. In terms of on-chain data, Sui has repeatedly entered the top 10 largest blockchains in the world, according to total value locked. During its strongest growth period, the network STVL exceeded $1.7 billion and even approached the $2 billion mark, showing that DeFi capital flows are increasingly focused on this ecosystem. However, Sui's biggest difference at this stage lies in the strategy of breaking the cost structure. Miston Labs has officially activated a completely free feature for stablecoin transfers on the network. By minimizing computing costs and using revenue from the Sui dollar, a native stablecoin backed by US government bonds that generates yields to refinance the network, Sui is making it easy and free to transfer money on the blockchain the same way we send a message on Messenger or WhatsApp. Looking directly at the SUI technical chart on the day frame, we can see a harsh truth. The price-pushing craze of the previous cycle has officially cooled down. After making a historic peak in the price zone of over $5.3 in the early period of 2025, SUI has entered a long-term therapeutic and bearish trend. The intense sell-off pressure, combined with periodic token unlocks from the bears, has pushed the price line repeatedly to make the latter peaks lower than the former. As of June 2026, SUI is currently trading around the $0.75 mark. That is, it has evaporated about 85% of the value from the top. The most notable point on the chart is a very strong liquidity scan, long bearish candle earlier, which shows that the market has experienced extremely intense shaking off. However, instead of continuing the free fall, SUI prices began to trend sideways and formed a very tight accumulation zone from the beginning of 2026 to the present in the range of 70 cents to $1. This is a signal that selling is exhausted and large capital flows are quietly establishing a solid floor, making the 70 cents zone a support zone. Critical psychology before the network triggers new technological super trends. And that also leads us to the most important question. What will take SUI from a potential Layer 1 blockchain to one of the largest ecosystems on the market in the next 5 to 10 years? In fact, SUI's entire strategy is currently betting on 3 giant trends that could generate trillions of dollars of new value for the crypto industry. Let's explore in the next section. If you only look at Sui Network as a Layer 1 blockchain that is faster than Ethereum or cheaper than Solana, you may be underestimating the true ambition of this project. In fact, the Meeston Labs team is not building SUIs to compete in a market worth several tens of billions of dollars. They are betting on 3 trends that could generate trillions of dollars of new value over the next decade. And if just one of these 3 trends is successful, SUI's position in the crypto industry could change radically. The first trend is the global payment revolution in stablecoins. In a recent interview, the SUI team suggested that the biggest opportunity for crypto lies not in memecoin or NFT, but in turning the internet into a global payment system where money can be transferred almost free of charge. Today, the world processes hundreds of trillions of dollars in payment transactions every year, but much of it still depends on banks, Visa, MasterCard, or traditional financial intermediaries. Each transaction costs money and takes time to process. SUI is trying to change that by bringing the cost of transferring stablecoins to near zero. If successful, the network will not only compete with other blockchains, but will compete directly with the world's traditional payment infrastructure. The second trend is the AI agents economy. This may be the biggest opportunity, but also the least valued by the market today. According to many forecasts, in the next few years, there will be billions of AI agents operating on the internet, performing human tasks such as searching for information, buying and selling services, paying bills, or managing assets. It is worth noting that these AI agents also need to make financial transactions. They will have to pay for data, purchase computing resources, use services, and interact with each other in real time. The SUI team believes that the majority of future transactions will no longer come from humans, but from AI agents. They even claim that the next $5 trillion of value generated on the internet may not come from humans, but from AI, and to serve such a world, blockchain needs to process hundreds of thousands, even millions of transactions per second at extremely low cost. This is why SUIs were designed with the ability to scale horizontally in the first place. The third trend is Bitcoin DeFi. Currently, Bitcoin is worth trillions of dollars, but the majority of these assets are almost stationary and are not used effectively. According to market data, only a very small portion of the Bitcoin supply is engaged in DeFi activities. Meanwhile, institutions, hedge funds, and individuals who hold Bitcoin increasingly want to use the asset as collateral to borrow or make a profit without having to sell off their Bitcoin holdings. This is the opportunity that SUI is targeting through Hashi, a solution that allows users to use Bitcoin as collateral to mint stablecoins and participate in DeFi activities without relying on centralized intermediaries. If only 5% to 10% of the global Bitcoin supply is put into DeFi in the future, the amount of liquidity flowing into the crypto ecosystem could amount to hundreds of billions of dollars. When we put these 3 trends side by side, we see that the real ambition of Sui Blockchain is not to become a faster or cheaper blockchain than the competition. They are trying to be the infrastructure for the money flow of the internet, for the AI economy, and for the huge amount of liquidity that lies within Bitcoin. These are all trillion-dollar markets, and they're still very early days. Of course, you don't have to bet on a big trend to succeed. Many projects have a compelling vision, but still fail because they can't attract real users. However, these three trends are the reason why more and more investors are starting to see SUI as a long-term investment rather than just a short-term speculative coin. But if the opportunities ahead are really that big, another question arises. Do large financial institutions and cash flows see the same thing? Or is it all just a nice story to be told to the retail investor? That's what we'll analyze in the next section. The first evidence of smart cash flow intervention is the clear distinction between personal and institutional capital flows. While the panic drove a large amount of the speculative cash flow out of the ecosystem, taking Sui's total locked-in asset value from its historic peak to a stable accumulation zone around the $550 million to $650 million mark, the core capital inflows of major market makers chose to stay put. More specifically, the Sui protocol has officially recorded the total volume of stablecoin movements and transactions on the network, surpassing the record $1 trillion mark. A blockchain that relies on only small players trading memecoin will never be able to generate such a huge volume of cross-border currency movements. This figure is proof that Sui hedge funds and over-the-counter OTC trading desks are choosing as payment rails thanks to their superior processing speed and near-zero overhead. Not only on-chain cryptocurrency operations, the organization is also openly expanding traditional investment products associated with SUI on major stock exchanges. Global asset management giant VanEck has officially listed its Sui ETN product 100% backed by physical SUI tokens in the European market, quickly attracting more than $30.1 million in net assets under management right during the bleak market period. At the same time, Grayscale, the world's largest cryptocurrency investment fund, is not only effectively operating the Grayscale Sui Trust, but also continuously completing legal procedures to prepare for the listing of ETF products on the Nasdaq Stock Exchange. The emergence of these financial instruments has opened up a secure capital pipeline, allowing pension funds and the super rich to pour money straight into SUIs without any technical or legal hurdles. The ultimate reason for Sui to completely conquer strict financial institutions is the strategic step in activating the secure money transfer feature at the protocol level. Institutions have always yearned for a network that can absolutely secure sensitive business information such as internal payrolls or the volume of real asset transactions in front of the public, but they can use old-fashioned anonymous money mixing tools because of the risk of breaking the law. Sui's new feature successfully solves this dilemma by fully encrypting balances and funds in transit for conventional wallets, but at the same time providing a legal compliance solution for financial institutions and major analytical partners such as Chainalysis to check the origin of clean money when required by regulators. This perfectly compliant security infrastructure is why even the United Nations Development Program has decided to partner with the Sui Foundation to research the application of blockchain to global public utility solutions. In short, global financial institutions have never left Sui Network. They are quietly leveraging a period when SUI prices were held back by tokenomics, inflationary pressures to absorb cheap supply and perfect the core infrastructure puzzle. From ETFs, compliant secure payment gateways, to the Bitcoin liquidity release protocol Hashi, it's all being prepared in a synchronous and solid way. When private capital suddenly awakened from hibernation and realized the overwhelming presence of the institutional side, it was also at that time that the most explosive and long-term growth cycle of SUI in 2026 to 2031 was officially activated. But if growth is slower than expected or supply pressures continue to weigh on the market, investors also need to prepare for periods of extreme volatility. So in the worst case scenario, the base scenario and the most optimistic scenario, where can SUI prices reach in the 2026 to 2031 period? And more importantly, with the current data, should investors buy, hold or sell SUI now? Let's go to the last part of this video. From the perspective of Sui technical analysis, we can see that the 0.70 to 0.80 zone is acting as a very important psychological support area. After more than a year of continuous decline, SUI has started to form a long-term accumulation background instead of continuing to form new bottoms. This does not guarantee an immediate uptrend, but suggests that much of the panic selling may have been absorbed. In a pessimistic scenario, if the crypto market enters a prolonged weakening cycle or SUI is unable to convert the technological advantage into actual users, the price may continue to fluctuate in the $1 to $3 zone until the end of the decade. This is the case where SUI still exists but cannot become a dominant blockchain. In the base scenario, if the ecosystem continues to expand, maintain its position in the top layer 1 group, and benefit from the growth of stablecoins, Bitcoin DeFi, and AI agents, SUI is fully likely to return to the old peak zone of $5 to $8 in the period 2028 to 2031. At that time, the capitalization of the network will be among the largest blockchains in the market. In the most optimistic scenario, if SUI really becomes the infrastructure for large-scale stablecoin payment flows, attracts strong institutional capital flows, and accounts for a significant portion of the Bitcoin DeFi market, as well as the AI economy, a price of $10 to $15 or higher is not impossible. However, to achieve that, the network needs to prove its ability to generate real-world demand large enough to absorb the amount of tokens that will continue to be unlocked for years to come. So, what is the final conclusion? For long-term investors, Sui news today is like a high-risk growth bet with huge profit potential. It is not yet a safe haven asset like Bitcoin, but it is no longer a purely speculative project. If you believe in the future of stablecoins, AI agents, and Bitcoin DeFi payments, SUI deserves to be seen as a hold or buy position, according to a piecemeal accumulation strategy. Conversely, if you do not tolerate high volatility or are concerned about supply pressures lasting until 2030, staying out of sight is also a perfectly reasonable option. And that's the whole picture of Sui Crypto news for 2026 to 2031. This is a project that has strong technology, big vision, and is betting on trends that can shape the future of the crypto industry. But like every high-growth investment, big opportunities always come with big risks. Ultimately, SUI's success will not be determined by promises or compelling presentations, but by its ability to engage real users, real cash flow, and create real value for the blockchain economy. So, instead of asking how many times the SUI update can raise the price, the more important question is whether you have enough confidence to hold on when the market fluctuates. If you find the video useful, don't forget to like, subscribe, and ring the notification bell so as not to miss the next in-depth analysis of crypto and long-term investment opportunities. Thank you for watching and see you in the next video.